Hello, folks. I opened JNUG in the 4 hour time frame this morning. It was the first chart I opened and just happened to notice what I think could be a decent setup for a trade. I believe I have captured all of the parameters for this trade in this chart. Read the text, read the notes. If you have questions, throw them in the comments below. I'll do my best to respond to them. I want to give a hat tip to Morris Hubbard, if I'm pronouncing his name correctly. The 6 and 60 crossover, that comes from him. I do my best to acknowledge when I borrow techniques, I find something that works or appears to work. I do my best to acknowledge where that comes from. And in this case, the 6 and 60 comes from Morris. So thank you, Morris. The basics of this trade, to my eye, it looks like we've got a potential price breakout. JNUG working on a price breakout there. The obvious target to my mind is this open gap. Basically fill the gap. We might get a breakout and a retest. Depends on how bullish the price action is. Maybe we get a breakout without a retest. We'll see. Maybe we don't get a breakout at all. That's always a possibility. I like the 4 hour time frame when I'm trading the leveraged, the 2x. I don't really do the 3x. The 2x bull or bear ETFs. I like the 4 hour time frame. That's what I'm showing here. Let's drop down. We can just look at the 1 hour time frame for reference. One of the things I like in this time frame is that it convinces me of the validity of this Andrews pitchfork. We can see that price came down here, tested the median line of that fork twice. Two nice tests there before heading higher. This is exactly what Dr. Andrews told us would occur and demonstrated would occur 80% of the time or more. Price in a valid pitchfork is going to reach the median line of that pitchfork and then do one of 5 well-defined price behaviors. In this case, we have price reaching the median line and reversing direction. And just that's again off on, I don't want to go off on too many tangents, trying to keep my videos short these days. And so to my eye, again, sorry for scooting around like that, that looks like price getting ready to or attempting to break through a resistance level and potentially head higher. And so since we've got it in view here, in this time frame, notice that we already had our 6 and 60. If we were using 6 and 60 as a buy signal, an entry trigger, that trigger already occurred and is continuing at this point. So, but we aren't trading, and that's a good point that I'll make. We aren't trading in the 1 hour time frame. We're just looking at this for reference. Maybe if we're trying to fine tune our entry or exit point, we drop down to the 1 hour time frame to do so. This is not the chart we're trading. The chart we are trading is the 4 hour time frame. It's important, in my opinion, to define when we're trading. We're not buying investments that we intend to buy and hold. We're trading. We've got a reason to enter a trade, and hopefully we've got a potential reason to exit the trade with profit. And that's what I'm getting at here. So here's JNUG in the daily time frame, more of the same. And so, again, we're nowhere close to a 6 and 60 crossover in this daily time frame, but we can see the potential. Here we got the crossover, and what is that? That's 4 months. That 6 and 60 did a pretty good job of capturing that move in JNUG. So anything else in this chart? We're not in bull mode yet. Histogram, kind of looking like it's rolling over and might go flat. Like we might get some more sideways action in in JNUG before it moves any higher. There's a lot going on at a geopolitical level right now. I'm not going to delve into it. I just suggest that the activity that is currently ceased is by no means over. This is a pause, and I suspect without much delay will be resumed. And my hesitancy in playing in the financial markets right now is that the volatility, the risk, what's going on geopolitically makes me think that keeping my powder dry at this point might be the smartest trade of all. So let's see. This we've looked at this chart before. This is a ratio chart between the mining stocks and the broad stock market as represented by S&P 500 index. In my mind, the mining stocks are continuing on their outperformance, in their outperformance of the broad market. That's going to be a slow movement. I suspect that most of this movement is institutional money. At some point, the retail trade will recognize or may recognize mining stocks as the place to be. In this chart, what I'm showing in blue is basically blue sky territory. This is the possibility that mining stocks just, they go off and wildly outperform the broad market, which, that possibility exists. Talk to you soon, folks.